Hello and welcome to the Crypto Club and Digital Assets weekly catch-up on Zoom. It is Sunday the 12th of May 2024, and as is always the case, we never quite know what we're going to be talking about. We talk about blockchains, DeFi, NFTs, ICOs, STOs, any other three-letter acronym really. Some weeks we talk about CBDCs, regulation, legislation. So irrespective of whether you're a novice or an expert, stick around, see what you find of interest. If you enjoy this, do click on like, subscribe, or even better, come along to a future session. We hold these every Sunday evening, 7 p.m. till 8 p.m. UK time. There are details on how to join in the link below. So with that, let's see who's going to come and join us today. Stefan, hello. Welcome back.
Hello, thank you. How are you?
I'm good. Always good to see you back again.
Yes, thank you.
You've turned into a regular of the sessions.
Yeah, I actually enjoy talking about this subject and also interacting with other people about this field, and that's why I'm
Yeah.
mostly here.
Yeah. Well, this is the thing that we never quite know who's going to show up for these things. So, it may turn out to be like a one-to-one fireside chat between you and I, or it could be that we get a whole bunch of people coming along. We just don't know.
This should be interesting.
Yeah. So, what's any particular area of interest that you're looking at the moment in the crypto space?
Not much. I'm just mostly thinking about the consolidation and how low can the price of the Bitcoin go? That's
Hmm.
mostly what I'm thinking right now.
Okay.
And yeah, I am also exploring some crypto assets mostly. But yeah, right now it's mostly like waiting and sitting on the sidelines, in my opinion. I mean, it's good
Yeah.
if you have money. If you don't have skin in the game, I think this is a good time to buy.
Well, I never offer financial advice in any of these things, but certainly it's interesting. Bitcoin, for example, you mentioned at the moment, I think it's around about $61,500 right now, um,
Mm-hmm.
which means it's recovered back to where it was, I think, around about the 24th of February. I think it was that price. So,
Yeah.
if you take a look at it from the beginning of the year, the beginning of the year, I think Bitcoin was around about $36,000. It's still, what's that, 40% up in less than 6 months. So it kind of depends on your perspective, and that's why I always find it interesting when you look at charts. When you zoom out and zoom out, there are completely different patterns all over the place, and so you might think
Yeah.
initially that you're in a really bad period of descending. In actual fact, when you zoom out, it's a gradually increase. It's just there are various incremental changes going on. But
Yeah,
that's
like
why. Go ahead.
sorry, Bitcoin monthly chart looks quite good actually.
Okay.
Usually it has like a small dump usually
Okay.
when the halving is happening, and then it's just green. That's how it shows on a monthly.
Okay.
But it can always change in the end. It can always be something a bit different. But I think right now it's just a consolidation.
Yeah. Well, this is the thing. I mean, I'll pull a chart up, in fact, so we can take a look at it. But if you look at Bitcoin at the moment, this is the USDT 1 hour chart, and we had
Hmm.
something of a what looks like a major collapse here from 63 down to 61, so like $2,000 drop, so several percent um, earlier on today, kind of like mid afternoon UK time. So when you look at this chart, you think, oh well, it's had that drop and it's been dropping over time. It's kind of like consolidating, as you say. It doesn't look great. And then when you take a look at the 1 day chart, well, actually, it's just consolidating after it had a period of going up quite nicely.
Hmm.
So all of a sudden you think,
This,
well, that's. But
sorry,
I was going to quickly say, if you then extend on beyond that and take a look at the weekly chart, it's like, wow, since February, or in fact September of last year, it's been going up massively, and it's just that it's got this recovery stage at the moment. So it really depends
true.
how far out you zoom out and that kind of thing as to where you really think it is. So you're about to say something else on that.
Yeah, I wanted to say that I don't know, do you believe in the patterns? Because most of the people that I spoke with, I mean not most, but I used to know this economist.
Hmm.
I mean this is something I know like personal, and the economist was saying like I used to see him back in 2017, like trading cryptocurrency, Bitcoin mostly. And I asked him like, why do you do this? And he said that because if you have a game, Bitcoin, it has the most basic pattern. So right now, this pattern, the way it looks, you can treat it either as a falling wedge,
Hmm.
or you can take it as an ascending channel.
Yep.
These are the two options you can have. As a falling wedge, it should go onto the top of the wedge, and the
Hmm.
ascending triangle should go up to like from the pattern that it was in front of it, which is also like 90K, around 90 to 100K,
Okay.
but remains to be seen, to be honest. I'm really
Well,
curious if we are going to dump down, because if we would, probably is going to take longer, like this summer is going to be boring.
well, there's never such a thing as boring in crypto.
True.
Um, as the reality of it. But the other thing as well is I find it fascinating about charting that in traditional stock markets, you're charting real products, real customers, real services. It's got a physical thing underlying it. So if you're trading in oil, then somewhere along the line, there's some physical oil either coming out the ground or going through a refinery or being shipped on a container. Sorry, shipped on a tanker in some way. So there's some sort of physical connection. With crypto, there's no physical connection in any way,
Mm,
and so charting, I believe, does work because you're using charting to predict the behavior of the marketplace, not the behavior of the product, and that is a little bit different to traditional stock market trading because it means you're simply using charting as a predictor of the next behavior of other people, and they can be quite
true.
predictable. Um, but yeah, I've been on any number of training courses where you're doing technical analysis, and they'll talk about head and shoulders and rising dojis and all sorts of stuff. And the thing I always caution people about listening to these people who are talking about doing technical analysis and charting is, whenever they say, oh, well, if you look over here, you can see like a rising thing descending here.
Yeah,
That's obviously a double head and shoulders. And as you can see, it happened there. It's very easy to predict what's already charted. So,
yeah, true.
if we look at a random chart, let's take a look at Bitcoin on a 1 day chart. And you could argue, oh well, that you can obviously see in this phase here where there was a low at 42.7, there was a high, then there was a period of consolidation, so it was obviously going to go up. And look, sure enough, it did. No, no, get
Yeah.
get people who are good at charting to actually figure out what's going to happen next to the right of the end of the chart, not to the left of it. It's always the thing I
Honestly,
say.
I think that charting is good if you understand these features and how do you call what you need to look for. But I
Yep.
think if you really want to be successful in charting, this is something I never had the patience, honestly. What you should do is you should wait until the ultimatum. For example, the way it was with the Corona dam
Mm-hmm.
in 2011 or 2020. Sorry, yeah, 2020 or 2021. Bitcoin dropped like significant, like two times, if I remember, half, 50% almost, if not a bit more, from the price that it was. It was around 12,000 and it went to 4,000 actually.
Okay.
And this would have been like a crazy dump for someone who understands like basic ideas. Bitcoin would have gone up back. And this happened the same with the stock market. So I think that there are moments like if you really understand how charting works, I think you can be very successful,
Mm-hmm.
but you do need a lot of courage, I would say. So I don't use another
Yep.
word.
Yeah.
You need to not care about the money and to be also like um, certain in your
Unemotional.
decision.
Yeah.
Yeah, and to be certain on your decision because as people, when you start to see that, okay, you might be wrong, you start doubting yourself and then you're your own
Mm-hmm.
enemy.
Yep. Yep.
And
But
this is very
the
bad.
There's an awful lot of psychology in all this, definitely. Uh, and this is the thing when you talk to people who may have been from the traditional stock market or commodities markets, that they'll always talk about keeping the emotion out of it, using proper risk management techniques, and
Yeah,
accepting that you're going to have losses as well as wins. But the other side of it that people don't often realise is that it's sometimes feeding a form of addiction as well, and that's where people can get a bit
true.
stuck. That there's a great feeling, a great buzz when you buy into something and you see its price going up, and that's fantastic, and it probably feeds endorphins and gives you a dopamine hit and all this kind of stuff,
Yeah.
which can be addictive. And then
It's
when you have the thing
also,
where when the chart turns, you get the opposite.
yeah, you get fear. I also think it's another thing, but now we get into gamble. It's the
Mm-hmm.
idea that you can always make another decision and that decision will change your life.
Mm-hmm.
That's a bad decision. That's a bad mindset. If you
Yeah.
think like that, it's really bad. And yeah,
Well,
I actually found myself sometimes thinking like that. But yeah,
I've certainly seen people where gambling has been really life changing for them, but not in a good way.
really.
Yeah,
Oh, okay.
not in a good way.
Oh,
There are not that many people who are consistently successful or
yeah.
who go in, do well, and say, "That's it. I've made my money. I've exited." Because you think about it again, it's like the whole concept of gambling addiction. If you put some money into something, you've made a huge profit, and that gives you an
Mm-hmm.
absolute hit, and you think you're invincible and you're brilliant. What are you likely to do? Because a lot of people's
Mm,
psychology is they go, "Well, if I did it once, I can do it again." And that's where they can start having problems because if they do win a game, they go, "Oh well, that's fantastic! I've done it twice, and I'll do it a third time and fourth time, and then the fifth time the luck runs out and they lose." Um,
true.
or alternatively, they win once, and that gives them the nice feeling of superiority in there, and then they try again and they lose, and they think, "Oh well, that was just bad luck. I'll try again." And they lose, and they think, "Oh no, that was just really bad luck," and they lose, and now they're running out of money to support what they're trying to do. So this is the whole thing, and I know I think in last week's session you said you'd never gambled, um, but if you go to a casino, there's a concept you can use which is called doubling. Okay, so if you think about if you're at a roulette wheel
Mm-hmm.
and you put your $10 say on red and it comes
Yeah.
up wrong, then if you lose the $10, then all you do is on your next go, you put on $20, and then if you win, you're nicely ahead. And then if that doesn't work, then
Oh,
you put on $40, and then if that doesn't work, you put on $80, and you keep going on. That's this whole idea of doubling up. The problem with
yeah.
that is that it assumes you've got infinite money to be able to keep putting in. So that's where
Yeah.
it starts going wrong.
Interesting. I never thought about this,
Yeah,
but I
and
never thought about
mm,
this decision, this type of gambling. I never
yeah.
considered it.
What do you think about that? It's as children, you find there's a game double or quits, which is where you have a competition against someone, and if you lose, you say, "Well, double or quits," which means you want a rematch, and you want a rematch if that doesn't work, and you want a rematch if that doesn't work. That
Oh,
works.
yeah, yeah.
That works for children, but when you grow up and it's real money, then that doesn't go so that doesn't work so. That's what concerns me as well in the crypto space. You'll quite often hear about people who say, "Oh, well, you need to dollar cost average," and when they
Mm-hmm.
use the term dollar cost average in crypto, they either don't know what it actually means, or they think it actually means something else. So you'll hear some people say that the dollar cost averaging because they're just putting in a few dollars, per day, whatever, which isn't dollar cost averaging. Dollar cost averaging, in theory, is if you've bought, say, Bitcoin at $60,000 and it goes down by 10%, then you buy again at the lower rate on the basis that your average cost for your Bitcoin overall is reducing.
Yeah, that's
That's,
true.
yeah. And again, they say, and then if it goes further down again, your dollar cost average, you buy some more at lower price. That means your overall average price is coming down all the time. They go, this is great. It's like you're on a sinking ship, and in stocks and shares, eventually shares don't usually go to zero. The only time they do is if the company goes bust or if trading's suspended. Well, in crypto, there's nothing in the system to prevent it from going to zero. So you could keep dollar cost averaging all the way down until it crashes.
Well,
So
I mean, technically, I tell you something like I had stocks where they went like so low, but nothing goes to zero.
yeah,
Technically,
yeah,
nothing goes to zero.
yeah. And that's where you get what are called zombie companies as well, where they're not
Yeah.
really doing anything, but you can't close them out. So I see Ken's just joined as well. Hey, Ken.
Hi, how are you?
Yeah. We're just having a general chat about the crypto markets and charting, technical analysis, and price predicting and that kind of thing.
Yeah, I mean, that dollar cost averaging situation I heard you talk about.
Mm.
I think with the big tokens, Ethereum and Bitcoin,
Mm-hmm.
it'll work. But I mean, if you're picking up, I don't know, some meme coins somewhere,
Yeah, yeah.
it's
You,
there.
you're absolutely right because if you take a lot of crypto tokens as opposed to cryptocurrencies, then most of them kind of lose 95% of their value, and then they just trade as dust kind of thing. So you're right, they collapse away. Whereas Bitcoin, Ethereum, and some of the other layer one blockchain cryptocurrencies tend to be a little bit more stable in that respect. So Ken, did you get interested in trading and that kind of thing, or are you more into the technology behind the systems?
Yeah, I mean, I've been here for quite a few times on your show.
Yeah.
Yeah, so I do like the trading but mostly really on the blockchain side.
Mm. Because you're really into the Ethereum side of things,
Yeah,
is that
well,
right?
yeah,
Yeah.
yeah,
Mm.
the that ecosystem.
Mm.
I'm actually working on a project where I think I told you this, we're gonna fork
You're going to
Ethereum.
fork it. Yeah.
Yeah, gonna fork Ethereum, going to airdrop everybody their Ethereum tokens, and then we're gonna set up seven DAOs for each
Okay.
aspect of the ecosystem. But the main thing is we're gonna try and do execution sharding, as was envisaged in the original white paper. So as you know, with Ethereum now, they're doing that dank sharding. So that's why we're doing that. I mean, I
Okay.
have been having a lot of discussions with people. A lot of people talking about the parallel system, parallelization, kind of Solana kind of ecosystems. But as we've seen, they keep going down whenever they get a lot of volume. All those meme coins being traded on Jupiter and whatever.
Yeah. Well, this is one of the problems when you look at whether it's meme coins or NFTs or ordinals or whatever, that they increase the interest, which is great, and they increase the awareness and the enthusiasm there. But it then means that the actual technology is being used more and more to support what's effectively trivia and kind of gets in the way. This is one of the things I was worried around Ethereum at one point, particularly as they launched like the whole ERC20 smart contract token, which was what a lot of ICOs were based on, was that there was a risk that if the tokens became so popular, that kind of undermined the whole credibility of the entire blockchain layer because it means it's just spending all its time processing these sub-level tokens as opposed to actually processing the main core transactions, if you see what I mean.
I mean, I quite like these experiments, as I
Mm.
call them, because the simple fact that a lot of people went on to Solana and were actually able to stress test it meant that all the stuff that they were telling us about their, fantastic TPS and so forth, was actually not there yet, was more of a roadmap rather than reality.
Yeah.
So we were able to actually, everybody was able to publicly see it. And now they're talking about their Firedancer, which they think is going to sort of kind of resolve a lot of that issue. But again, I mean, the founder, I think, said Firedancer should have been out last quarter, I think it was. Actually, not even last quarter, the quarter before, because now we're in May. We're talking Q4 2023. So it's the quarter before that, before the last one.
Okay.
But as you know, with software, you know, what he should have said is it will be out soon, rather than trying.
Well, I thought, having worked in technology for many years, the trick is to always say it'll be here in 18 months.
Yeah,
but you never actually say a date.
Yeah, so I mean,
you always just say it'll be 18 months time.
Yeah, well, he just gave he said, you know, it should be out in Q4 last year, and everybody was extremely excited. Q4 came and went.
Okay.
And it's been extremely interesting. And one of the things that basically that I think happened is because it's actually not been worked on by them. It's a different team. So
Okay.
I mean, Solana's ecosystem, it's challenging, but they're optimizing for speed of transactions because the people behind it want to basically make the quickest trading platform in the world. They're mostly traders, quant traders, so they're really optimizing for the speed of transactions, and therefore they have to obviously make a trade-off, and that trade-off, as we've seen publicly, is capacity.
Okay.
And so when you get a lot of people on it, then the capacity, and that's a trade-off where execution sharding will not trade off the capacity issue. But the question that we have to answer, would execution sharding be quicker than the parallelization or parallelized processing? Now, that's something for the future. We don't know. Some people say that it will solve that scaling bit, but it will give up on the speed a little bit. But it's something that, because it hasn't been tested, anybody can come on and give their opinion. As long as it's a good faith opinion, there's nothing to basically say against them.
Yeah, I think that's the thing. You hit it on the nail before when you described it as an experiment, because that's where I still think a lot of the blockchain world is in the experimental stage. And the problem with experiments is that they don't always work, which is why you experiment. And so I always find it quite funny if you're working with a company who say, oh, we'd like you to try an experiment, try out this new idea or whatever. And you try the experiments and it fails. And they go, well, that's no good. It's like, well, actually, no, it's really good because we've proved what you're going to do won't work. And we've just saved you a load of time and money in that. So I think that's the thing with some of these crypto ideas, that they're all experiments. And some of them, as a result, will fail. It's just the nature of it. So,
yeah, it's going to be very, very interesting on what happens because I mean, I went onto one of their onto this site basically. I forgot the name. Is something like Bonk Meme or something like that. Basically, you can go there and for the equivalent of, I don't know, 20 cents, you can spin up your own meme coin and then just go into Jupiter. And yeah, so that's why they're getting so many people just going and spinning up so many meme coins. And I also learned something which I didn't know about meme coins is because I mean, I asked a question to a friend of mine, and actually he works in Coinbase, and I said, look, how come you guys are able to go ahead and just list a meme coin really easily, but you're so difficult to get real projects to list on your exchange? And he said, well, basically, because meme coins are just that, they're meme coins. They're not supposed to be, because it goes through the Howey test and all sorts.
Okay, yeah.
And he goes, they pass basically everything. It just means it's like you putting your money somewhere in a casino knowing that you can lose it. And if you've got a serious project, reason is harder because people are expecting profit from the work of others.
Yeah.
And so what it is, it's easier for centralized exchanges to list meme coins than it is real projects. And that's why meme coins that get traction will be listed very easily. And so there's that end of it that helps to fuel that meme coin thing.
Because the other thing I saw a number of years ago in the ICO craze was that a lot of the exchanges were charging quite high fees to even consider listing a token. And that was where it got really interesting at one point. So I did some work with a couple of crypto startups who were looking to do ICOs. And the sheer cost of asking an exchange to evaluate you to be listing was like you're talking hundreds to thousands of dollars for some of them.
Well,
And that was just to be considered, not to be listed, but just to effectively push your way up the list of everything that they're looking at.
well, in my personal experience, because I did go through the ICO phase, we did do an ICO, and I mean, I'll name them because I have before, and people have obviously given their own points of view with Binance. Right at the beginning, when Binance was just starting out, and their policy was basically we'll list everything, whereas Coinbase and Kraken were like, oh, we need to go through all sorts of hoops and so forth before we can consider you and so forth. But so if you wanted to go through one of those guys, like for example, the ones who are might think of considering you or whatever, you'd end up going and hiring a lawyer. Typically, these firms would be based in one of the major cities. So you're talking London, in the US, in New York, or in Singapore or Dubai. Well, not really Dubai. Dubai used to be an offshoot. The main ones you'd get, and then they would charge you all this money to do the due diligence with the major exchange, and then they'll come back and say, well, they said no. But obviously the bill's still there and you have to pay it. But Binance was different because with Binance, all they told us was like, give us $1 million, and they wanted 10% of the token supply because they saved for liquidity. So so you had to give them $1 million and give them 10%, and they wanted 10% of our token supply.
Okay.
And at that position, we were like, what? We said no, but other companies did do it. I do know a good friend of mine. He did it, and he goes, it was one of the best decisions he ever made. Because as soon as it went onto the exchange, the token went up, and they were able to make back that $1 million really quickly. And with regards to the tokens, the main issue was, I thought personally, that what Binance would do is would immediately just dump your token and and he said no. He said that they didn't dump tokens, and when they were looking to offload it, they did that in a very kind of like managed way over a long period of time. So in terms of the project that I know of, the founder said they were extremely happy with the whole setup. So it's one company. I've got my experience, he's got his own experience, but
I think one of the firms I did some stuff with, it was similar. It was just a very high barrier to entry. For some of them, if you think like some of the ICOs were starting off with zero capital behind them, it was pure play speculation. And then to suddenly have to try and find some real money, so to speak, to get listed, it was kind of which is where some of the exchanges would do a deal whereby they got a percentage of the token. So if you had a hard cap of $1 billion or whatever, that they'd get an allocation themselves, which they'd get for free. And on that basis, if the token did well, then they were quids in. And the startups didn't mind that because it wasn't a real cost to them as such. It was kind of like a future lost profit, so that they could cope with that. Then you started introducing all sorts of things around the taxation treatment of that, and
what you're talking about is what the bulk of the exchanges, because we spoke to a lot of centralized exchanges, the bulk of them run that model. Binance didn't run that model. Binance wanted you to have already done your ICO before they would contemplate taking a meeting. So you needed to have already done your raise. But a lot of exchanges that run that model basically did a lot of dumping. And another thing is a lot of dumping was done on the weekends. Saturdays and Sundays. So the market will be fantastic during Monday to Friday, and as everybody goes to have a lovely weekend, family and friends.
And a tank. Yep. But I think that's the thing, though. If you've been in this space for a while, you've seen all of this going on, and happening in cycles as well. There's been some of this similar stuff going on with NFTs at times. Certainly with some of the meme coin type ones, where you saw similar behaviors. And it's as you were saying before, some of the meme coins now are relatively easy to get listed onto some exchanges. And I think that's simply because some of the exchanges are willing to take effectively a private airdrop in some ways, where they get an allocation. They go, yeah, we'll list it, no problem.
Yeah, and
No.
on the flip side is the delistings as well, because when you do a deal with the exchange, you have to have a certain amount of
Trading activity.
yeah,
Isn't it?
trading
Yeah.
activity every day or every week, depending on your agreement. And I remember when we were speaking with Binance, one of the things they were actually also insisting on was to use their own market maker. So that was another cost where rather than going onto the market and picking your own market maker, they would have their own list of people that they had deals with. So you had to use them. And so you'd see a lot of coins when the market makers were obviously getting paid, they'll be floating really high. And then as soon as the contract finishes with the market maker, it just drops 70% literally the next day. Because there's no support for all the support had been faked.
And I think that's something else as well. You're talking about volumes. I seem to remember there was a story a long time ago, a number of years back now, about, I think it was BSV, so Bitcoin Satoshi Vision, the spin-off or fork or originator of Bitcoin. And someone eventually realized that the majority of the volume on that blockchain was not actually buying and selling trading. It was some company was using it for capturing meteorology data or IoT data or something. And so the actual transactional volume on the blockchain was not of trading. It was simply of capturing data. And so it was a way for that blockchain operator to claim that they had certain volumes in some way. And I'm sure the same thing's gone on with cryptocurrencies as well, where there will have been some coins or certainly crypto tokens, sorry, where probably some of the companies behind the crypto tokens have done their own trading simply to maintain the volume so they could stay listed.
Yeah,
Which means that it's
a
fake.
lot of the market makers took care of that. And in the early days, I don't think it's so prevalent now, but in the early days, wash trading was a big problem in all the centralized exchanges. What has happened, I personally believe, it's not regulation that has resolved that. It's actual DEX, decentralized exchanges, has resolved that. Because if somebody is not getting a lot of volume and is on a DEX, then you kind of wonder, why would everybody just trade on this one exchange, yet they're on 7 DEXs? It just doesn't make any logic, because I might go on a DEX, you might go on a centralized exchange, another person might. People don't make the same decision. So that kind of put a stop to a lot of them. But that's why a lot of, especially the bigger tokens, I'm pretty kind of, some of the bigger ones, the newer ones, who you can only trade on centralized exchanges. So they'll have 3 or 4, and that's the only place they can get them. Those I'm still kind of, well, what's going on behind the scene? But if you've got some trading happening on a DEX as well, you can have a look and say, well, actually, there is real volume. Because on a DEX, you have to pay your fee. It's, you can't just send it back and forth with 0 fee as you can on a centralized exchange. If you're on a decentralized exchange and there's a fee to pay, there's the gas fees and whatever, you have to pay those fees, and those fees go to somebody else. So it's interesting, but we are in a very early stage at the moment. So it's,
Yeah. I guess the other thing as well, because I find it interesting with DEXs, because some people like them because they don't have the same level of control in place. So they don't do so much around KYC, AML, all these 3 letter acronyms and that. But in a way, that can be a problem in its own right. because it means it's then harder to then retrade those cryptos back onto a centralized exchange, which does do KYC AML, because you've no longer got that what's known as the FATF travel rule. So that the whole traceability piece of knowing where something's come from and gone to. Sorry, JT, were you going to join in there?
Yeah, I was saying that, look, with taxes, nobody can stop any token as long as the token is, let's say, ARC20, okay? Let's take that. Anybody with liquidity can provide it with X. So there's no way a SEX can stop and say, no, it can only be on our exchange. It's impossible, because I could easily go and buy tokens on a centralized exchange, and then they just provide liquidity pair on any DEX, and that's it.
Yeah, the question is, would you want to do that?
No, but that's what I'm saying. Exchanges can, because you said something about, exchanges said that only the token could only be on our exchange. They can't do that.
They can be on there. That what you're talking about, it's the difference between theory and practice. It's that good old saying, everything looks fine in theory, but absolutely difficult in practice.
No, I'm not saying it's a good thing to do that, What I'm saying is that they cannot tell anyone that they cannot list on a DEX.
You're very correct. I mean, you can provide the liquidity on a DEX.
Anyone can.
The question is, who would provide the liquidity? Literally, there has to be liquidity. Now, I'll give you a good example. There is a DEX that, it's a semi-DEX really. Ether Delta, I don't know if you guys remember that from way back when.
Yeah, I was going to say that's an old one, isn't it?
Yeah, Ether Delta, one of the first kind of DEXs. So there was an argument between, I don't know, the founder, he sold it to some guy in China, and then the people running the front end decided, well, they're just going to fork the front end and basically continue using the same DEX, the same smart contracts for the Ether Delta, but they're going to call it Fork Delta. So the guys of Ether Delta front end still had that Ether Delta front end. So you had a choice of going to the Ether Delta or the Fork Delta. But a lot of people went to the Fork Delta because they were just able to market or give a better story. So ETH Delta, technically you could use their front end, but nobody did. So after a period of time, they closed down. But Fork Delta, well, actually it's closed down as well now. But it won that battle. So some things can happen in theory, but practically, because it's to do with money. Would you fund somebody else's? If you don't make money, can you fund? I didn't see that SEC charges.
Yeah, and that's in back in 2018. so that's why it went a bit quiet. The early ones where the SEC said, you're offering an exchange here, then stop. Okay. Sorry, I just happened to pick up on that as you were chatting away. Sorry, Ken.
I wonder if Uniswap is a protocol, can you just use their pools and everything, but use another interface and you capitalize on their money?
Yes. You can. That's what Sushi is.
Yeah.
And many others.
But in this case, do you still pay that fee for Uniswap? Or I can just put my own fee and I can make the money?
No, you make the money. So the Uniswap is just providing an open source solution, And then if you put your own servers, your own liquidity, list the tokens, then nobody can ever stop you do that. That's the same thing with, we were talking earlier about, a few minutes ago, about anyone can provide liquidity. Of course you can, as long as you have a lot of liquidity and you can have a market maker for certain things, let's say an exchange has a lot more tokens, dumping the token. I mean, you need to keep things in sync. It's complicated. It's not that easy to actually do that, So it's not advisable, but they can do it, So exchange, anything that is on a, how should I say, a decentralized blockchain if a token is launched, ERC20, it can be listed in any DEX out there as long as you have enough liquidity to list it, you know? It's as simple as that. So it's your choice to do it.
Was it
Interesting.
SushiSwap where there were some challenges with the original founder? Or am I getting that mixed up
No,
with
yeah,
a
you're right.
spin-off of SushiSwap?
Yeah, there was a long time ago. God,
Yeah, I
about
seem
that.
to remember there was an interesting history where it was being taken in a certain direction.
I think it was something, I can't remember. It might have been something that he actually sold a lot of the sushi tokens and the community lost confidence in the guy. Something around that. I can't remember exactly. Or he was
Yeah.
hacked. It was one or the other. I can't remember. It was a lot of,
I think
it
that
was
was like
something around money, you know, something
Yeah.
happened. I don't
it was
know.
around that 2021 time where you had
Yeah.
the food wars, as they were called. So you
Yeah.
had sushi, then I think you had jam, and then you
Yeah.
2020, actually, end of 2020, if I'm not mistaken.
2020. Yeah, you're probably right. But it was brilliant that sushi thing, because he was the first one to actually go and do a vampire attack on Ethereum. He forked the whole code, and then the only difference is said, well, if you provide liquidity here, you'll get another token. And people loved that idea, and they would just move their liquidity. It was brilliant, and that's why Ethereum had to. Sorry, not Ethereum.
If he did that these days, he would be in trouble with law enforcement because it's totally legal. Vampire
Yeah.
attacks and all of that stuff,
Yeah.
and front running, and this is totally legal, you know?
But what he did though was I mean, basically what he did was, we call it vampire, but technically I don't think it was a vampire attack. All he did was he innovated. He said, look,
No, it was a vampire attack.
oh, I mean, technically I don't think so. I mean, how would you define a vampire attack? Technically, I think it wasn't. Technically, because what it was an innovation. He took code that existed and he innovated into it. He added the ability for pools to give token. Now, most pools give tokens. I mean, there's token file. I mean, even Ethereum itself now, you can get ETH, staked ETH token, and you stake your ETH, you get your staked ETH, and you go away and you do whatever you want with it. So he innovated. That was an innovation that has now proliferated right across the industry, and not only on Ethereum, but on all the other chains. I mean, look at Solana. They also use that thing. So some of these things start small. It's just like Uniswap itself. Uniswap was actually an innovation of what was that token? B something. There was a DEX out there, but the only difference is with their DEX is you had to use their token as the base token. So you could have any other token in Ethereum as the second token, but the denominator token had to be theirs. All Aiden did was change the denominator token to it being Ethereum. And so people were like, well, there's a much bigger market. And it's, it's really interesting how the market goes on. But I still don't think it was a vampire attack. And
it's well documented. It was because it was all around Uniswap and the LP tokens. I mean, if you
find a definition of a vampire attack?
Well, here we go. We've got Cryptopedia here, which has got the article on SushiSwap and Vampire. And funnily enough, one of the things it does do, good enough, is it does provide a description of what
there you go.
is.
It fork Uniswap. It was all around that forking and doing it. I remember now.
It was all to do about moving the liquidity. And I remember that time Uniswap was very scared because I think half the liquidity moved within a couple of weeks.
Mm.
It was I personally think it was a great time because there was so much happening every day.
Because he ultimately handed his tokens back to the community, didn't he? And said, I'm sorry, here, have everything back, I'll step away. Which
did you look at Curve?
No. What
Curve? The one who built Curve protocol, he did the same, but instead of disposing of his cryptos, of his Curve tokens, he basically loaned against it, and he loaned a lot against a lot of his Curve token, and that's why Curve is not going up. Well, that's what I read.
Remember during 2022 when all the issues were happening and companies were going bust, it turned out that he'd received 100 million against his curve, and he was busy selling like the curve, his position, to individuals, VCs and so forth, to try and stabilize curve's position. I remember reading an article, and they showed you a very nice apartment, or no, may I say apartment, massive mansion in Australia. So yeah, he did that. So, and that was, I remember the time when I realized, and a lot of the industry realized, there's other ways of rug pulling rather than just selling. It just,
I honestly, I have also curiosity about this because I was trying to learn about taxes. So if you, for example, instead of selling your tokens, you lend against it, and then you basically, let's say you don't pay your debt that you loan, you just let your collateral to be, how do you say, closed. Basically, they will sell your token, and then they will give you the remaining. Technically, that's not a sell because you've been margin called
It
and
doesn't
you
really
lost your
matter.
money.
It depends which country you're in as to which the taxation kind of like regime operates, though. Because if you've as you say, if you lock the token up and you're
Yeah,
generating and you're generating revenue from the yield, then the revenue from the
you
yield is still taxable.
Yeah, but for example, you have Ethereum, you stake Ethereum, you put
Hmm?
wrapped stake Ethereum, and then you put it in Aave, and you take a loan on that Ethereum, and then you've been margin called, and you lose your Ethereum, and your loan is being paid off. But you technically you haven't sold the Ethereum, you've been margin called, and from what I know, you technically that's classified as a loss.
Yeah, but it's a disposal of an asset, and all it means is that the asset value at disposal
I
is
suppose,
probably going to be lower than purchase. So
suppose if
you've
you
not
get
made a profit anyway.
if you get liquidated, I mean that's just usually you don't get anything back most of the time, so your asset would go to zero, I suppose.
Yep.
So you can just
Yeah, but that's the thing. You still made the loan. You got the money.
oh, yeah, that's another thing. Well, I don't know how that would work.
Yeah,
And
Yeah,
that's
so
what I want to say.
you've got
Like
the
you,
money, you've gone on holiday, you've had a good time,
yeah,
and you've
no,
been
what I want
margined.
to emphasize is that if you stay to think, you can avoid the disposable tax because if you take a loan against your collateral and your collateral gets liquidated, then you don't pay capital gains or income tax on your income anymore, but you took debt on it.
so most people in crypto, unless they're using it as their primary source of income through trading, don't pay income tax on crypto anyway. In the UK, they pay capital gains once it's more than £11,000 or whatever the number is these
It's
days.
6,000 years here this year.
€6,000, okay? Because you're in Ireland, is that right?
No. It's
No.
no. Sorry, it's 6,000 pounds in this year. The capital gains tax went to 6,000, and next year is gonna be 3,000, and the year
Okay.
after I think is gonna be nothing.
Okay. Yeah. But
Wonderful.
yeah. So this is where I always say that it will vary from regulators. Oh, sorry, it will vary from jurisdiction to jurisdiction in terms of tax treatment, and it is important to read the stuff on it. So in the UK, if nothing else, it's the very fact that you have to provide evidence of all of your transactions, irrespective of whether they've gone up, down, sideways, or whatever. It's actually the proper recording of the transactions, which is part of the critical thing.
I mean, I was in a seminar once, and there was an individual speaking about I can't remember which country in Europe, but apparently the way they taxed it there, it was when you because obviously the difference is you'll buy and sell, so it's when you transfer the money or exchange the money from fiat to crypto. At that point, that's your base, obviously. And then when you transfer the money back from crypto to fiat, then that's how you can work out your profit and loss. But then obviously there's all sorts of things. So if you can transfer it to fiat and then you transfer half the value and then you sell the other one, you know.
And this is why it's the keeping of the records important. So in the UK, I believe it doesn't work that way.
No,
In the UK, you have to record every transaction event. So if you buy Bitcoin, that's an event. If you then sell the Bitcoin for Ethereum, that's an event. If you then sell the Ethereum to buy some of the tokens, that's an event. So you don't have it. The whole thing originally used to be it was when you went from fiat to crypto and from crypto to fiat, where it became far more complex than that. And this is where you start looking at staking and wrap tokens and all this kind of thing. It's basically when you do any transaction, that is a crypto event in the UK, I believe. What I would recommend, because I'm not offering finance or taxation or legal advice, do check the HMRC website, which has got loads of details about this.
Yeah, because
You guys were talking about meme coins when I joined. What was that conversation about?
Just saying about how it is that meme coins can be relatively easy to get listed. Certainly compared to what would describe as mainstream cryptocurrencies or other tokens. And that there's been loads of meme coins that have appeared on various exchanges.
Yeah, to list on exchanges, it's very, very hard for any meme coin. It has to have like enormous amount of community. I mean, the exchanges listing has changed dramatically, dramatically in the last 3-4 years. 3 years, pretty much. Because, what they used to do, they will charge enormous amount of money. It's not justifiable, depends on the jurisdiction where they are. Also, give me 10% of your tokens, that doesn't happen anymore because you can't do that, so it's quite hard. And meme coins, they tend to list them when it actually gain a lot of traction, when they reach 1 billion market cap, for example, then exchanges are up because what they want to do is they want to make money from transactions, right? That's where they want to make money. And of course, from futures, and they'll potentially launch futures as well for that token. But in essence, I've been looking at this quite recently, I think the majority of the money at the moment from retail, I'm talking about retail, it's not really on projects, it was pretty much in Bitcoin and Ethereum and maybe Solana, but retail hasn't got in yet, since last cycle. And where retail is getting in, it's on meme coins. No doubt whatsoever. So it's the only thing getting traction for is meme coins. So I think VCs are going to find out this next cycle quite hard, if the retail is not coming to projects and find the tokens, because they know that the VCs have bought the tokens, they're going to dump the tokens on them again. A lot of retail lost money in the last cycle. I think retail is becoming a bit more clever, and I think it's going to be a very serious problem for capital venture in this next cycle.
I take the opposite view, and the reason I say that is retail only comes in at the top. So retail, I definitely agree with you. Retail's not here yet, and what you have is a few playing in meme coins. But you wait.
So they came in. If you look at the statistic about meme coins, it's pretty much retail.
Yeah,
but that's money
that is a very slow percentage. Look, the market cap dropped down to 828 billion from 3.1 trillion. So 3.1 trillion, you need to go back to I think that was 2021, in November 2021. So 8th or 9th November 2021. It dropped all the way down to the 31st of December to 828 billion. So retail got extremely hurt. We've now gone back just to about 2.4, 2.5 trillion. We're not even back to the all-time highs. Once we break that 3.1 trillion and we're moving up above towards that 4 trillion, when people are sitting there and listening to the story that their friend or their neighbor just made money, that's when it's going to go bananas. And unfortunately for retail, they come in at the top. It's just gonna be, that's the thing. When we talk, like the four of us here talking, the retail aren't here, and we know what's going on. And if we want to get in the market, we'll probably have taken our position or will at the moment. They'll come in when the market, maybe end of summer or early next year, when the market's now up at about 5 trillion. Then they'll come in because they hear those stories. That's what drives retails, those stories of people making money. And when they come in, they would know, they would just be throwing their money all over the place, don't know what they're doing.
Okay, so who was buying the tokens in last cycle, 2021? There was about 8,000 projects that launched their tokens, yeah, and it was not at the top. Yeah, the top was like October, November 2021. So between November 2020, actually, let's say DeFi summer, because DeFi summer started August 2020. Yeah, from August 2020 until October 2021, who was buying tokens?
Degens.
You think degens?
Degens are the ones up there on the meme coins at the moment. And the reason I'm saying that is because these degens are flipping from coin to coin.
So you're saying $1 trillion it came from degens in 2021? No, not at all. You have the wrong statistics. I remember I was analyzing some of the statistics in 2022. Yeah, it was retail got in around February 2021. Yeah. And it was a bit already like halfway through Bitcoin. Bitcoin was already halfway to, I think it was around 40K at the time, more than halfway, yeah, to the top, yeah, and that's when the market went crazy in February until beginning of April, which crashed again, and then it came back again in September, so retail got in again.
We have the same data, but we have different conclusions. My conclusions are different. The data is the same, but just in life, we got different conclusions. My conclusions is the degens came in first, they drove the market up, and then retail walked in, they took positions at the top. So we're talking here from summer to November, and that's why the crash really hurt retail so much when it then dropped down. The degens, they're the ones who give that initial drive. The retailers, so the retail, they come in at the top and they give you that kind of boost where everything is now just going up. Not everything is going up at the moment, just selected projects. When everything starts moving, even something that you thought was dead, you start seeing it alive. That's when retail's in, and that's when we're at the top, and they're going to come in by the top, and then, unfortunately for them, start complaining when everything just blows up in their face. So retail's not here yet.
But folks, we're really sorry. We're going to have to close this off now because we're kind of at the end of the time. But Ken, I think, made a really good point there, that we're all agreed on the data. It's just that we're disagreeing on the interpretation of the data. And that's the thing I love about crypto, how it is that we can see the numbers, but we don't truly know what's causing a lot of the numbers. This is why whenever I get the whole thing where people say, what caused Bitcoin to go
I disagree.
down?
That's why there are indexes out there, yeah, and people tracking, yeah. So like I posted a link, VanEck started now, it was announced this week, yeah, and index tracking for meme coins, yeah, because that's how you look at it. Your opinion you can have an opinion, of course, but an informed opinion comes from the data. We all look at the data. It's not about opinions, yeah. It's about actually looking at the data and looking at the data and actually then creating an analysis on that data. And there are reports available out there, yeah?
But I'm just saying that my analysis is absolutely different.
I can guarantee you that the gens don't have $1.2 trillion, yeah? And that's what happened in 2021.
It's first of all, the market cap moves up at a... so for every $1, it takes it up about $10 to $20. So you've got to basically take that into account because it's a smaller market, and also the way the liquidity works, it takes $1 has a much higher multiplier than it would in a normal stock market. So like I say, I made my analysis, and I have a different analysis on it. In fact, it's a very good...
So you think the degens... So let me ask one thing. Do you think the degens are not in crypto yet?
No, degens are in crypto.
So why
Retail is
why did we went only to 73K? So between 73K and 350K, which is the projected, who's gonna come in?
Well, first of all, that's again about projections. We've got projections that start from around 73 to 80K, going all the way up to 1 million. So you can take your position on there and decide where it is. I believe, and this is one of my things, is what's going to drive the next market is the injection of liquidity into the market by the Fed and the central bankers. As you can see, I don't have the charts in front of me, but liquidity has bottomed around October last year, and it's now started to come up. M2 money supply just crossed into positive last week.
I don't disagree with you on that. My question was very simple. Okay, if they are all in now,
they're not in.
Gens, like you said.
Gens are in.
Why aren't all the tokens reaching their all-time high? Only Bitcoin, Ethereum, reached their all-time high.
Ethereum hasn't reached its all-time high. It's only Bitcoin.
No, Ethereum reached the all-time high.
No, Ethereum's all-time high was $4,800 and something dollars. It's reached about 3,900. It hasn't even touched 4,000.
Guys, we're the only ones here.
I'm going to quickly see if I can pull up the chart on it.
But it was close, It was not the very far Ethereum. Okay,
what we got here?
Yeah, sorry. Let me just say this. So my point is very simple. If the degens are in, all the other coins out there, let's name it. Polkadot hasn't even take off. XRP didn't take off. Near, is like 4x away from the all-time high. You name it. Solana was getting closer, but it didn't, and it retraced. You look at all of the tokens, that reach really large volumes. None of them reached their all-time high. Okay.
That's because we're just
Bitcoin. Hold on, let me just finish. And Bitcoin went just a little bit above their all-time high, and Ethereum didn't reach their all-time high. So if the degens are there already, then we should have the same levels that we reached last time.
No, because degens don't drive the top. Retail drives.
That's what I'm telling you. I'm telling you, retail is not even in, and retail is what's
retail drives the top. When they come in, it'll be the top. The degens are the one driving this meme coins.
You said degens. Sorry, you said retail coming at the top, and I'm telling you, retail doesn't come at the top. Retail comes halfway through, and everything is pumping. Okay. And they didn't come this time to all the projects launching. There was a lot of projects launching, and we saw that a lot of them launch and then they just dump. Completely.
Well, let me just say something.
Hold on. This didn't happen in 2020 and 2021. What we seen this time happening is while all these projects were launching, while Bitcoin was pumping and Ethereum and a few others, and Solana, the only ones that were pumping and the only ones getting retail was meme coins, and this is going to be a repetition from October, November onwards, because I think retail finally realized there is another way for them to make the 50x that they hear the VC is making all the time. I think the retail has learned in these last 2 cycles, and they're becoming more clever. People think, retail is stupid and we're going to dump on them. That's why the crypto VCs do this all the time, And I think this time is going to be a big surprise for them.
I heard that when everyone talked about NFTs, they were talking about that. But anyway, I've already done my thesis. I gave a presentation 2 weeks ago in which I said I believe the market is going to go up to anything between 8 and 10 trillion at the top in 2020. I think the Q1 or Q2 2026, because I said it lasts generally about 25% longer than the previous one, looking at my data. You can look at the data and you can disagree, but those are my conclusions. And if I believe it's going to go up to, let's just call it 8 trillion, and we're sitting at the moment at 2.3 trillion, we haven't even started. So when you're talking about this little pump, and by the way, Bitcoin did hit an all-time high, and that happened on the 14th of March this year. But that was because of, everybody knows, because of the ETF, the demand of the ETFs. That hasn't even gone through. You've got departments that are still going through their 401ks, so the guy can pick if he wants a bit of Bitcoin in it, and that, you know, those things take time, and then once it goes through the system, it's going to go up. I've written my thesis. I've put it up in public, and everybody can read it. And I believe the market's going to be between 8 to 10 trillion at the end of this.
Yeah, that I agree with you, actually, you know.
And that's what I'm saying. We haven't even started yet.
But
These are
Ken,
details,
I don't disagree with you on that one, yeah. Because the money is not going to come from retail this time, yeah. Last time was, this time is going to be institutional money that is going to come. So that I agree with you, yeah. What I'm saying is that last cycle, retail came halfway through around February 2021, and that's why we see those two peaks, you know, 63 and then 69.
Just one question. If you think the money is going to come from institutions, which institutions? The institutions are not allowed to trade meme coins.
No, I'm talking, no, you said total market cap, and total market cap is going to be driven by Bitcoin, you know, and if Ethereum is not going to get into trouble with the SEC, maybe Ethereum as well. Okay, that's the majority.
Bitcoin, I think, will do okay, 2x, 2, 3, 4x, but Ethereum will outdo Bitcoin. Solana's going to outdo Ethereum, and then what I call alt ones, the other alternative layer ones will outdo Solana, and then after that, depending on which, you know, you can analyze. But the big gainers are going to be outside that, and it's going to just taper off. And so we're talking here next year.
So the institutional money that I was referring to is anything from the guys running ETFs, because at some point, you know, the Bitcoin that they've been buying since 2019 is going to run out. Yeah, so they need to buy more. Yeah, so that's going to drive the price. It's going to come from banks that are going to be authorized. Yeah, to have that. There's going to be a few central banks, I can guarantee you that, okay, if they are not already doing it. And many other institutions, they're going to copy what MicroStrategy has done, you know, very large institutions. So it's going to drive, even Apple potentially is going to, if they are not already, you know. So we will see that a lot of the money coming next cycle, yeah, is going for this 8 trillion is going to be institutional money. And I don't think projects are going to do that well, you know.
Yeah. Guys, I really need to close this off now, but it sounds like you're both vociferously agreeing with each other about the overall direction. It's just that we're arguing as to what's going to drive that direction. Great conversation. Really, really interesting stuff. Both of you, please do come back next week. We can carry on with that. And Ken, if you can make available a presentation, if that's public domain, be delighted if you wanted to talk through some of that next week.
Love to.
Future one. That'd be really interesting. I think that'd be fascinating. So gonna have to call a halt to this now. Wish everyone a great day. Thanks very much for joining us. If you're watching this on YouTube or whatever, then click the subscribe, like. Even better for everyone. See you next week. Bye for now.
Bye.